Time once again to check on the latest earnings trends with Zacks Director of Equity Research, Dirk Van Dyke. So far in this third quarter, we seem to be down about, 22%?
22% on total net income year over year. Most of that is the financials, which are actually running at a loss,
right.
Not just down smaller profits, but actually losing money. And even that's kind of generous because some of the big write-offs, like the Wachovia, we excluded that big breakdown of goodwill that they had. So it's really ugly, particularly in the financials. But if you back out the financials, we're seeing positive growth of about 6.5%, mostly from the energy group.
Yeah, I was going to say, overall, outside of those pesky financials, earnings seem to be holding up rather well.
Yeah, but what's interesting is that we've had almost twice as many positive surprises as negative surprises, but historically that would lead to a lot of analysts raising their estimates, particularly for this year. I mean, it's just a point of mathematics that if you have better than expected earnings for the third quarter, you got to raise your full year numbers. Or you're implicitly cutting your fourth quarter numbers.
But they're not doing that.
They're implicitly cutting their fourth quarter numbers by doing it.
Yeah, they're cutting estimates pretty heavily at this point.
It's the heaviest I have seen, I think, in my life. I mean, it is, overall, we're almost at 5 cuts for every increase. The only sector where positive surprises seem to be translating to some net estimate increases is healthcare. Everybody else, it's just if you're getting 3 cuts for every increase, you're a superstar. You're doing well.
Right, but I think even amid all of that news and amid all of that cutting by the analysts, earnings focus seems to be going out even a little bit further than fourth quarter, going out into 2009. That's where the base of the interest seems to be focusing right now. What are earnings saying about expectations for the next year and beyond?
Well, you've got pretty healthy expected growth expected for 2009 versus 2008. However, that's only because 2008 keeps on going down, down, down.
I see.
So they're sort of going down in parallel. So, we've got a 20% expected growth rate over whatever 2008 turns out to be. But that keeps on getting slashed and slashed. And actually, the estimate cuts for 2009, if anything, are heavier than we're seeing for 2008.
Well, I saw something interesting for 2009. One forecaster out on the street predicting the S&P 500 at about $95 a share, or about 10 times earnings. So what do you think about that? You think it might be a little closer to $65 a share? About a 30 to 35% haircut?
I think that's very conceivable. Really the only expected growth of any significant magnitude for the fourth quarter is in energy, but those expectations have to come way down along with the price of oil and natural gas, which have absolutely collapsed. Now there is an offset for some of the airlines, trucking companies, things like that, but they are seeing no demand. They're and so it's not going to help them very much. Yeah, their costs go down, but they've got no revenues.
Here's something also that I found pretty interesting, that now many of the analysts who are looking a little further out say that even after we emerge from this current recession, downturn, whatever you want to call it, earnings could still face some headwinds that would make the kind of double-digit gains that we've been used to over the past several years just unattainable.
I think there's probably some truth to that. I mean, I'd have to work through, all the details of that. But, most certainly in the financials, that's going to be the case because the old business model is broken. people are not going to be able to use the sort of leverage that they did up until recently, and they're drastically trying to unwind. That will, mean that financial earnings are going to go back to being really dull, sedate, boring, and coming off of a really low base.
So give us a quick rundown of the 3Q scorecard so far.
The 3Q scorecard, well, the best surprises are in healthcare. There you're running 8-1 positive over negative. The highest EPS gains are coming from energy, but you've got less than a third of the energy companies in. Overall, we're almost at the halfway point. Financial is really ugly, but that's the only sector where you've got significantly more disappointments than increases. Mm-hmm. Median surprise is running at 2% positive overall, which historically we've been looking at over 3% as sort of normal, so it's down, but it's still on balance. You're getting positive surprises on that EPS growth front. It's the total net income numbers that are just simply horrendous, and what you're looking at there is half the sectors actually in negative growth territory.
All right. We want them to go to the text version of your piece this week to find out what those numbers actually are. Earnings Trends provides investors with an in-depth analysis of the markets along with the profit performance of S&P 500 companies each week. And each week this report identifies which S&P 500 sectors are showing strength and which are showing weakness. Also, the report in detail goes into the most attractive sectors based on valuation and projected earnings growth. Dirk's entire commentary for this current week, including his median growth and revisions tables, may be viewed, as I said a moment ago, online. You can link to them right off of our homepage at Zacks.com. Just scroll down the page till you see Dirk's picture in the headline, and it'll take you right to it. With Dirk Van Dyke, I'm Terry Ruffalo.